HELOCs, Home Equity Line of Credit. HELOC, right? Also known as the equity loan, home equity line of credit, whatever you want to call it. It is all one and the same, which is essentially a credit card or a checking account against the equity in your home that a bank has given you. Now, these can be incredible opportunities for people to make home improvements, do different things, make big payments on stuff, and be able to pay them down, maybe lower their overall interest rate percentage. So, used in many capacities, this is an absolutely incredible product. However, at the time of closing of a real estate transaction, it can throw a kink into your closing. Here's why it's a potential challenge for a title company whose whole and sole job is to make sure that all debts, all encumbrances, all challenges with the potential property are handled before the closing. This is the potential challenge. So we come upon closing, we're days before. Now the seller of this home is the buyer of another home, and they write themselves a check from their home equity line of credit for the down payment on the new house. How cool is that? Unbeknownst to everybody else, they signed a freeze letter 10 days before. But it hasn't all caught up because the check is just in transit. So transaction A closes, transaction from that HELOC check is now in the second transaction. We close, go to make the payoff on that HELOC, which we had already had a demand for, and now all of a sudden there's a lot more money used on that HELOC. Because our industry has taken a number of losses or hits because of HELOCs, we want to make sure that we avoid those potential challenges. And so, with that being said, on a HELOC or an equity line, however you want to call it, we as an industry are requesting that the demands be no more than 3 days old from the date of closing. So if you're in a transaction or you have a HELOC and you're closing a house yourself, you want to make sure that your escrow company has updated that demand in order to allow it to close and the payoffs to go out on time. If that demand, which on traditional mortgages is typically valid for 30 days. However, again, a HELOC acts quite a bit different than a traditional mortgage because it's open. Now, I know you yourself may be an absolutely honest person, and maybe the people that are doing this don't even realize fully what they're doing. However, it does cause a big quandary for us as an industry. So in order for us to give a totally clear policy, ensuring the property is fully satisfied before closing, we need this information. So help us help you. If you are an owner and you have a HELOC, maybe just ask the question of your agent or escrow officer that has been done. If you're an agent or a loan officer watching this video right now, make sure that you pay attention that when there's a HELOC payoff involved, that this will need to be addressed. Alrighty? Now I can speak for Ticor Title and all of the Fidelity family of companies that this is going to be the same rule across all of those companies, and I believe most title companies in the industry have implemented a policy such as this. This is your tip of the day to try and make sure that your closings, especially at the end of a transaction, run extremely smoothly. So God bless you. Hopefully this information is handy, and just wanted to make sure that you are in the know when it comes down to home equity lines of credit and closings of real estate transactions.